Hello and welcome. It's a pleasure to host you here on behalf of the Global Digital Asset and Cryptocurrency Association. Today, we have an amazing guest speaker, Joshua Townsend, from our member firm Digital Currencies Governance Group. Joshua comes to us from London. He serves as the head of UK policy at DCGG. I also have with us today Global DCA Policy Fellow, Dylan Hall. Dylan will be providing a few opening words before we get started, and then I'll pass it over to our friend and colleague, Josh, who will deep dive into a brief summary of what we're looking at with regards to His Majesty's Treasury consultation on the UK's future digital assets framework. As per usual, all of our events are professional level events, so we ask you to please remain muted through the course of any formal presentations. Since we have a manageable group today, we'll likely do oral questions and answers and discussion. Josh has kind of gently opened with the idea of this being more informal, so that people who are on the call can benefit from some of the knowledge and perspectives today. And again, we encourage debate, discussion. We just ask you to please remain professional and to maintain professional decorum in expressing your opinions and perspectives. With that, I will turn it over to Dylan. Dylan, go ahead.
Great. Thank you so much, Gabby. We're really excited at Global DCA just to be hosting this event. And one of the things we wanted to highlight is this is a public event. So we're also opening it up to firms that aren't members of Global DCA. And the reason why this is important is we're looking at, providing consultation and ultimately a response to the UK's future digital assets framework. And this is something where we want to pull together the best response. And so events like this with DCGG and Joshua give us a chance basically to make sure that we're staying abreast of the current trends in the industry. I teach a class at the University of Chicago and run a mortgage banker safe rate, which also focuses on tokenization of mortgage assets, in addition to being a Global DCA fellow. And one of the things we've seen here in the United States recently is sort of a state-by-state response, especially in the event of the FTX collapse. And what's been really frustrating as a company, as a policy fellow, is just trying to figure out how do we respond to all these different sort of regulations that are coming forward, being proposed at the state level. Often you're just getting a bill and reacting to it. And I think one thing that really stood out to me in reviewing this 82-page document from, the Treasury out of the United Kingdom was just how they're asking questions. How should a digital asset be defined? And this is really an opportunity for firms that are, trying to understand how do I navigate the regulatory framework to actually use their voice. I thought this document was really open-ended. Obviously, I don't know all the details to the extent that DCGG, and that's why Joshua is here to really give us that insight, but just kind of comparing to how at the state level here in the United States, we're kind of running around with our hair on fire trying to make sense of what do they mean by digital asset exchange, and will this affect my business? Here we have a federal government that's basically asking questions saying, is this how a stablecoin should be defined? Is this how a digital asset should be defined? And does this regulatory framework, they're actually proposing a framework as opposed to just getting down to a bill right away. And so I think, as companies, as policy fellows, as people that are interested in this space and want to make this a safe space, this is how we engage early on, have a great working relationship with governments, and really try to propose legislation that has the best aspects of the industry, but also works to prevent some of the worst aspects of the industry. And so this, talk is really meant to just give us a deep dive into this and hopefully pull together a really incredible response so that we make sure that we're actively engaging with governments who are asking questions and trying to be as informed as possible as they try to make decisions. With that being said, I'll hand it over to Joshua now. And we're really excited for this talk and sincerely appreciate your time.
Yeah, thanks, Dylan, and thanks, Gabby, and everyone for joining the call. I guess, first of all, sort of good afternoon or morning for most people on the call. I'm, as mentioned, Joshua Townsend, so Head of UK Policy at Digital Currencies Governance Group, and delighted to be joining this webinar to discuss the UK Economic and Finance Ministry or His Majesty's Treasury's ongoing digital asset consultation. So a few things to say up front. So Digital Currency Governance Group is a boutique trade association that represents some of the largest players in the digital asset space. So that includes Tether, the largest stablecoin by market cap, Ledger, one of the largest sort of wallet providers, and among others, including a sister company that supports firms looking for guidance on where to locate in international jurisdictions, which will be based on regulatory requirements and other factors such as tax. So if anyone's interested in further conversation, please reach out. But for the purposes of today, intend to keep it quite informal, as mentioned up front. But the real purpose is to talk you through some of the main points of interest of the consultation and government's wider sort of vision for crypto, distributed ledger technology and digital assets as a whole. But should you have any questions or input, please raise your hand virtually or make a comment. If not, we'll cover it at the end of the presentation. So I think if we move to the first slide, I think the first thing to flag is the consultation is very comprehensive. It's around sort of 80 pages and there's a list of 52 questions. There's some overarching policy objectives. If we move to the next slide, sorry, again. Yeah, there's some overarching policy objectives and principles, which is kind of outlined up front, and the context to which this consultation through is worth noting. So almost a year ago, the then Economic Secretary to the Treasury, someone called John Glenn, announced that he wanted the UK to become a global crypto asset hub for technology and investments, and mentioned a number of things which is then reflected in this consultation paper. So there's 4 overarching policy objectives that they outline and what the government wants to achieve, which is namely encourage growth, innovation and competition in the UK, and that will be done by creating this framework that attracts digital and crypto assets firms to the UK. There's an education piece to enable consumers to make well-informed decisions. And then there's a protection sort of angle around UK financial stability and market integrity. So within there, this consultation has been written with 3 core design principles, which reflects the speech that was made last year. One of the main ones is the same risk, same regulatory outcome piece, which cuts across really a lot of the approaches towards emerging tech regulation at the moment. And from our perspective, we're very keen that the same risk part of this is followed through rather than assumed risk with the same regulatory outcome applied. So it really should take into consideration what the risk is in each activity and whether that same regulatory outcome is required. The second is an important one, which is a proportionate and focused approach, which we believe is sensible at this stage, given the spectrum of the crypto asset sector and activities and business models within the industry. And finally, which is almost lifted from the speech that was made a year ago, is an agile and flexible approach, which is adapting to the development of the industry. So all of this is the context within existing efforts within the UK framework, including the anti-money laundering framework, which has had its difficulties today, and those difficulties mainly being sort of a slow authorization process for a lot of firms that have applied, but there's indications that that's beginning to be worked through, at least from the Financial Conduct Authority's perspective. And then there was something published at the same time of this consultation, which is an update to the Financial Promotions Rulebook, all rules, which has changed via strong industry pushback on the proposed rules later this year. And then finally, there's the legislative sort of angle, which is the Financial Services and Markets Bill, which allows for the regulation of fiat-backed stablecoins, which are used for payments. But if we move to the next slide and we start moving towards the core of the consultation paper itself, Chapter 2 defines a crypto asset, and it defines it in a way a cryptographically secured digital representation of value or contractual rights that point A can be transferred, stored or traded electronically, and sort of point B that uses technology supporting the recording or storage of data. Notably, in brackets, includes which may include distributed ledger technology, which is a bit of a shift in narrative. So this is lifted directly from that piece I just mentioned in the previous slide, so the Financial Services and Markets Bill. It's intended to be quite broad and then apply subsets of that definition to certain activities through legislation. So in doing so, in defining sort of a broad crypto asset definition, they intended to capture as much as possible. It's broader than MiCA, but I think from our perspective, one of the issues is that this broader scope could lead to unintended consequences or accidental overreach of including unforeseen crypto assets within the regulation. An example, or perhaps second aspect to delineate the two, is that point B could unintentionally capture more of the industry than intended. So, for example, security systems that use cryptography are potentially going to be captured by this definition. So this is something we've addressed in the consultation. I know industry have picked up on this from within the UK. Notably, Treasury do have powers to amend that definition, but that's another sort of broader context of the definitions coming in. Sorry, I couldn't tell if someone's coming in for a question there. Moving on. So the point around, oh no, if we go back a slide, sorry, Mina. The point around specified investments, the decision here that Treasury has taken is to expand the list of specified investments to include crypto assets and require authorization under Financial Services Markets Act, which was a slight disappointment for some in the industry, because some players sort of wanted a bespoke regime, which happened with peer-to-peer lending in the UK, but others in the industry have welcomed the approach in terms of leveling the playing field with wider financial services. And a final point on this slide is that it will mean the FCA will have rulemaking powers. So it'll be important for industry to work with them on this, and we expect sort of further consultations. So if we move to next slide, we'll just touch upon this very briefly, but the firms that are already registered under the AML counter-terrorist financing regime, or otherwise known as sort of money laundering regulations, the idea is that you will need to get additional authorizations under this new proposed regime. Although Treasury has indicated that it will be designed so as not to require any duplicative information. New firms looking to set up in the UK will only need to be authorized under this new regime. And it's worth noting that there's a phased approach that has been proposed to introducing the regulatory requirements, and the phases will be prioritized by the greatest risk and opportunity. So what they've proposed is that phase one will begin with the issuance, custody, and payment related activities of fiat-backed stablecoins used for payments, and the reason for that being that they have the widest potential to be used as a means of payment, and therefore sort of systemic. Phase two, the government will focus on a broader set of activities in relation to all other crypto assets, and depending on how the market develops, additional activities may also be brought in within the regulatory scope in phase three or in the future. So that may be in particular looking at validators and mining activities. So if we move to the next slide, sorry. One final point actually to mention on the phased approach is that it makes sense and it is practical for given the long list of activities that you can see here. But one thing noting that if one crypto asset entity performs multiple activities, but there is only one area where there's regulatory certainty, i.e. sort of phase one, we know it's clear, but if you're doing other activities in phase two, phase three, which will be most relevant for sort of trading venues and exchanges, the firm may want to wait until all the phases have greater clarity before moving to the UK. So it's quite important that there's clarity on not to spread out a time between each phase being implemented. But focusing on this side, which is moving more into the core element of what exactly they're trying to regulate. So they intend to regulate activities, not the crypto asset themselves, and some of these mirror what is already regulated in financial services. So for phase one, so the fiat-backed stablecoins, the paper says further details will follow. But for phase two, the paper sets out the desired regulatory outcomes in each chapter of the consultation document. Then other activities may be brought within scope later on. The idea here is that if any firm conducting any of these activities, they will need to be authorized. So in the case of vertically integrated businesses or where businesses conduct a lot of activities, they expect to comply with all the separate rules. I mentioned exchange earlier, so issuance of a token, it will need to be regulated for that. Exchange, it will need to be regulated for that. If it performs custody duties, it will also need to be regulated for that and comply with all of the requirements. So this reflects that there's a broad approach to the scope and intend to capture activities provided, and this is the location-based requirements provided in or to the UK, which is definitely broader than existing rules under money laundering and wider sort of financial services. So what that will mean is that all overseas firms will be captured if providing services to UK customers. This is a particular point of interest for the industry, given it is a lot broader than what typically is the approach taken in the UK. Treasury has noted in the consultation, I'm sure there'll be a lot of calls for this, for particular exemptions such as reverse solicitation, overseas person exemption, which is something we've noted in our response. But I think that's a thing specifically worth drawing out, the broadened scope of how you can be captured by the regulations. And then finally, worth pointing out here that Treasury specifies in particular certain crypto assets such as NFTs or non-fungible tokens, really as an example that theoretically all NFTs could fall within scope of the regulations, but whether financial services regulations kick in, so i.e. sort of what's set out in this document, depends on the potential structure and characteristics and whether activities related to it are regulated. So it's going to require a lot of ongoing dialogue moving forwards, and something we've spelled out in our responses, the need for sort of a clear sort of digital taxonomy and definition. If we move to the next slide, I can then sort of talk, I'll talk sort of quickly through these ones to allow sort of time for questions, and very well it will be a monologue of me talking for very long, but Chapter 5 is sort of where we move into the specific regulatory outcomes for the activities. So for issuance and disclosure, Treasury wants to take the same approach as traditional securities. So when a crypto asset is admitted to trading on a venue or submitted for public offer, the desired outcomes here are primarily around making sure that investors have the information to make informed decisions, and there's quite a lot around what will be included in the disclosure documents themselves and making sure sufficient investor protections are in place. They do acknowledge that there's regulatory challenges, and it is difficult to adapt existing rules for security. So this is particularly relevant for issuers of crypto assets where there's no identifiable issuer or there's less control over the crypto asset. So the solution being proposed by the Treasury is shifting a lot of the responsibility onto trading venues themselves. So in the context of admitting a crypto asset, the principle is that trading venues will need to define the detailed content requirements of all and each crypto asset being admitted to the trading venue, including conducting due diligence, preparing the document where no central issue exists, and liability sitting with whoever prepares the document. So that's really creating an interesting or potentially strange dynamic where whoever prepares the disclosure document will take on the liability, but where there's no central issuer, that will fall on the trading venue themselves, and can cover sort of how the trading venues will have more of a role to play in terms of monitoring as we get to sort of later chapters. But it's worth sort of noting that as we move on to the next slide. Great. So for operating a trading venue, a lot of this is duplication throughout the paper in terms of the requirements. But as mentioned earlier, the approach is to apply existing rule books, and much of the consultation is to check how much of this fits to the crypto assets sector. So the approach here is to establish a regulatory framework based on the existing regulated activities order, and operation of an MTF would apply to a trading venue. So some of the requirements include, again, sort of prudential requirements, so that trading venues have sufficient resources. They haven't defined what the threshold for this will be, and that will be set later by consultation from the FCA. But from a consumer protection and governance perspective, they would need robust arrangements in place, and as well as operational resilience and data reporting requirements. So this all seems fairly straightforward at the moment, but it's important to draw out where the nuances are for the industry in formulating a response. So the perimeter here is really being set by Treasury with the details to follow, but it's an important opportunity to flag concerns over the approach where it doesn't sort of fit from existing financial services into crypto assets industry. But if we move on to the next slide, and we can sort of come back to this in a bit more detail at the end. But looking at chapter 7 again, intermediation activities, much of this is the same as before. So it's overlap with dealing or arranging deals in crypto assets. So here the requirements are, again, around prudential requirements, consumer and governance requirements. Where we need to make sure we analyze the impact for intermediation activities is that some of these principles here have long history of guidance for what they mean. So looking at a best execution obligation, where an intermediate route their client order, does that reflect well to crypto assets? There's also a range of intermediary activities. So whether the same prudential requirements should apply, same governance requirements should apply, we think will depend on the level of risk and really sticking to the principles they sort of outlined in the early part of the consultation paper. But that also goes for, if we go to the next slide around custody, they're looking to adapt existing requirements while looking at what is unique to crypto asset custody itself. So that's taking into account the need to safeguard private keys, activities to be regulated here as safeguarding and administering, or arranging the safeguarding or safeguarding and administering of a crypto asset, which is a bit of a mouthful. But the regulatory outcomes here are to make sure that there's adequate protection and funds can be returned to consumers in the event of insolvency or misuse or loss of crypto assets. So rules are focused on custody and safeguarding, and again, sort of prudential rules, protection and governance requirements, as well as operational resilience requirements. This would fall within phase 2, while phase 1 deals with the custody of fiat-backed stablecoins. But Treasury does note that they would expect the same framework would apply. So further details are potentially needed here, and we've stressed in our response the need to recognise the key differences between sort of hardware and software custody solutions and the level of risk they pose, especially if one has access to clients' keys or clients' sort of assets, that the risk level is a bit different, and that needs to be recognised. Great. This one is a particularly interesting part of the consultation one, and the most noteworthy chapters. So Treasury's outlined market abuse requirements based on the same existing requirements for market abuse, and applying that to crypto assets. But here they've acknowledged their limitations in their ability to deliver or monitor this, and policing the activities and what is inherently more borderless and fragmented marketplaces. And given there isn't an international framework for sharing oversight, Treasury have indicated that it's not possible to protect consumers in the same way as it is with traditional finance markets. So the proposal here does go as far as not giving the FCA enforcement actions against firms, as there will be a challenge in administering the regime, but they're keen to highlight or step away from the responsibility for this, and really shift the onus or the responsibility onto trading venues in terms of obligations to defer, detect and defer market abuse. So that's quite a big responsibility, and it will shift the onus onto, as mentioned, shift the onus onto trading venues to become the enforcers and disruptors of market abuse, which goes beyond existing requirements. And then there's a responsibility to share information amongst exchanges, publish insider information lists, public backlists, and really share information where there's any suspected market abuse, which a lot of it is a sensible approach, but perhaps there could be here more of a dual competency between the regulator that has some resources for market monitoring activities, as well as sort of more capacity to liaise with international regulatory counterparts and potentially be the enforcer for some of those sort of proposals, such as the public backlists. There is a point around where there's no central issuer, so it is for firms to identify and disclose inside information on crypto assets where there's no central issue that this does lie with the trading venue as well. So a bit of a shift there. So, but if we move to the next slide, and perhaps we can sort of come back to that afterwards. So chapter 10, this goes beyond the MiCA initiative, which is sort of the EU's regime for crypto assets. And it looks at crypto asset lending, and part of the reason why this is included here is the recent failures with Celsius and sort of FTX over the summer. In that respect, it is quite sensible to look at this, and they list a number of sensible sort of challenges that they found, pointing to poor management and liquidity risks. And they look to really address all of the things that sort of went wrong, and they do ask a question within the consultation on what the industry's perspective on what went wrong is. But they do identify this and suggest a number of proposals and requirements that would look to counter this risk to consumers. So that, again, that's looking at prudential, governance, operational resilience requirements. I think one thing to bring out, whilst it does say that, and all the details are to come, then at least from our perspective is a sense of proportionality. Giving lending covers a broad area, or crypto asset lending covers a broad array of services, and there's different levels of risk within each collateralized asset that is used for lending. They ask a question quite late on in this chapter around whether there should be a different approach between lending and staking. So there needs to be sort of further emphasis highlighted in the industry's response that there's differences between those terminologies as well. So staking to secure the blockchain, for example, is different to DeFi liquidity provision. So making sure that they fully understand all of the different factors at play here, as well as the risks, and therefore developing that proportionate regulatory response will be key. But there is a clear understanding within the chapter itself, but just further delineating those terms, I think, is quite important here. But otherwise, it seems a very sensible place to regulate. And then if we go to the next slide, which is covering, as you can see, how long this document is, and sort of the final sort of sections are call for evidences, and they cover sort of 3 areas in particular. So on DeFi, the key point is that Treasury doesn't intend to front run the work of international organizations. So we'll wait to see as and when, and as well as influence a global approach developing. Although it is considering here, and this is sort of the questions to industry, the different approaches to regulating DeFi. So one approach suggested in particular is regulating the on-off ramps to DeFi. So looking at protocols in particular. But the objective, and they've stressed this here, is not to regulate the activity of producing software, but regulating financial services activities. So Treasury has made the, I guess separate to that as well, but related, is that Treasury has made the point that a lot of DeFi arrangements are not 100% decentralized. So it may be prudent for regulators to apply controls to entities with significant control over the DeFi network. And they've asked questions around how they can sort of measure the degree of centralization or decentralization. So they've asked for views on what approach they should take, how it can measure it, to really move forward. But again, they've stressed in our sort of responses that international collaboration is needed. So welcome views from people on this call, if you have any views on that. In terms of the other crypto asset activities, so they're asking for views on ancillary activities, basically, such as investment advice, mining, validation, and clearing settlement. So they're essentially asking here what the case is for regulating these activities, including a particular question on staking, but they need to acknowledge, as I mentioned earlier, the key differences within this terminology, as well as taking a national approach in what is inherently sort of international will just risk a loss of competitiveness, which kind of counteracts what the UK's overarching sort of ambition is in this space. And then finally, and probably most briefly, in terms of sustainability, they note that there's existing ESG requirements for other financial services activities. So the suggestion here is to adapt these requirements so that they're basically asking in the document the benefits and process for transposing these towards the crypto asset activities, as well as sort of proof of work, the proof of stake, and everything related to that. But that's probably the smallest part of the whole document. But I don't know if we've got enough slide here, but if not, I think that's a very, very quick sort of run through of the document. But if there's any questions or points, I'm happy to attempt asking them now, or another point after this session. It was intended as a very sort of quick tool, but it's key to note that they're intending to, the key things to note is that they're trying to fold it into existing financial services regulation. They're asking here really, to what extent is this effective? And then detailed rulebooks will follow on the specific requirements themselves. But I'll pause there. If Dylan, you may have some points to add, because I know you've sort of read through the consultation itself, or anyone else in this call happy to answer some questions or close the session.
Thank you. Yeah, absolutely. I'll hold off on my questions. I have a couple, but I want to make sure we get our members' questions in first. So I see a couple of people have unmuted. I'm just going to go ahead and open it up. And if you have a question, feel free to get started.
Joshua, it's Rex from DeFi Safety. We spoke a few months ago. Recently, like last week, I did a response for a French DeFi paper. And I suppose I would have some inputs on the DeFi section. And I'm not sure how I suppose we can offline, we can talk about how I coordinate that, and with GDCA, just that we don't overdo it. And I can throw you that French document that I made comments on if you want.
Yes, one key thing that I should have mentioned as well is that the deadline is very soon for this UK one. So we're looking to submit it by the end of the weekend. So any information you can share, if you can share it as soon as possible, we can then incorporate it. Yeah,
I can do that right after the call.
Yeah, that'd be great. Thanks, Rex.
And from our side, Rex, Global DCA isn't going to be submitting a separate response. We're going to just be coordinating both with our colleagues at DCGG and also with Crypto UK. So it's probably best to go ahead and to provide inputs directly to Josh so that those can be carried forward. When we looked at some of the different, as you know, we have an overwhelming number of policy responses that get dumped on us in the US. And so when we started to kind of take a look at this and coordinate and identify ways to kind of expand our bandwidth, this was, one of those that was just a very natural fit. Okay.
Hi, Josh. I want to say thank you very much, and I look forward to speaking to you tomorrow at our event as well. So thank you for your presentation. I was wondering, to what extent, that someone mentioned you working with Crypto UK as well. I've had some input into the Chapter 9 responses, specifically relating to market surveillance. And one of the things that came up quite regularly was the supposed or proposed requirement that exchanges blacklist potential clients for malfeasance. Now, generally speaking, when stores are submitted, that's the start of the process, not the end. And the requirement that firms essentially act as judge, jury, and executioner for any proposed malfeasance seems maybe a bridge too far, or certainly a very large step to take. So I was wondering if you have any opinions about that, or if that's something that can be included on your consultation piece that you might give to keep it in line with Crypto UK.
Yeah, thanks, Jonathan. Yes, that's something where we shared the same concern, and we've sort of addressed that, and happy to sort of share our answer. But our preliminary view was that it's too onerous what they're asking trading venues to do, and I think a lot of it is sensible, and that it is the direction. I mean, trading venues have a unique situation within the industry, and have insight and access to a lot of information that perhaps the regulators don't. But I think becoming the enforcer is a step potentially too far, and that's really going to create weird market dynamics. So I think having a degree of responsibility left with the regulator for that, I mean, encouraging dialogue and communication between trading venues and the regulator to exchange that information, whether it's stores or another mechanism, should be encouraged. And that's really what we've outlined in our response. And I think as well, the FCA does have, and as do regulators across the world, have expertise in conducting market monitoring themselves as well. So establishing more of a shared mechanism will surely lead to a more beneficial outcome rather than just sort of being unsure of how to tackle it best. So moving on to the trading venue themselves. So that's something that we've definitely seemed to have shared an opinion on that, but happy to share our answer or for you to share yours to that to make sure that we're aligned on what we're saying there.
Sounds like we are. Thank you very much, Josh.
Yeah.
Cheers for taking my question.
Noah Healy here from Core Disk. I have done some extensive work on the game theory of markets and decentralized systems, and in particular on aligning the interests of potential disruptive players so that effectively they self-censor. I could also submit my white paper to you to take a look for examination of those regulations, because existing market structures are actually already unstable, even without adding in the decentralization piece. And that's another pretty strong factor for dealing with these things in a regulatory sense.
I was looking for the mute, but yeah, no, and that sounds great. Any information that you could provide or point me to would be really informative for us, and I think relying on like different points of expertise would be enormously helpful, as well as if anyone as well wants to get sort of quoted, if it aligns with our overarching sort of viewpoint of our response as well, that would be helpful to add a different perspective to our response, and particularly if it's an international perspective, and it sounds like you might have research that's aligned with that viewpoint. So that'd be great to, if that could be shared with us. Perhaps I can, I'm not sure if my email is actually posted. I can post it in the chat.
I think to the degree that, one of the things that's really unique about the global DCA is our global membership. And so, one of the things that we've worked on responses for other countries as well, working to try to provide sort of global examples or models to help, different parliamentarians, legislators, as they try to navigate this so that they understand some of, how this is viewed in other jurisdictions, can be very helpful to lending insight into what may or may not work in their home jurisdiction. So I think, just to kind of emphasize the fact that, some of this, it may be your experience and you may be in Australia or in Singapore or in the EU or the US, but a lot of the experiences that you have and what you're seeing, both from like a national jurisdictional standpoint, but then also from a standpoint of seeing this operate at a global level, can be very helpful to giving a holistic picture to public sector so that they can have sort of the most informed view when they're trying to craft something that helps both the British people, but then also their global positioning, and also finally the industry as a whole.
Yeah, I agree. I think adding in international sort of perspectives and narratives is really helpful. And there is relevance in particular around how different activities are being classified, because I know over in the US and Canada as well, it's sort of the definition and classification of stablecoins as well is sort of being misinterpreted, and sort of saw the SEC sort of session the other day about being unclear on how each thing should be defined. So any sort of pointing towards what works and what doesn't work, I think, is particularly effective.
I'm going to ask you, Josh, are there any areas that you have deficiencies in, or that you would like to specifically ask for help on from this group? Is there anything that you're maybe even not a deficiency, but it's a little bit lighter than other sections where maybe this group might be able to help fill in some of your gaps?
I think the legislative stuff is probably more sort of in our wheelhouse, as well as sort of the wider proposals there. I think it's mainly just where there's most relevant to each chapter itself, and there are a lot of details within the consultation, and I'll post that in the chat actually in case that's of relevant. Because whilst I sort of ran through it, it was the main commentary on what they're trying to do in the space. But if there are views on what doesn't work, from experience, whether within previous backgrounds in traditional finance and your current role, if you've got a solution in that space in between, that'd be really helpful examples to include. But I think the DeFi chapter probably in particular would be most relevant, and probably the lightest section for us at the moment, given that it's a call for evidence. I think there's real opportunity here to sort of influence the direction of travel at the UK level, but also UK is a very key voice in international conversations with counterparts, not just in sort of North America, but Middle East, Asia, and in Europe and across the world. So that would be a particular section I'd encourage dialogue on. But again, there's a chapter for each section, so if it's particularly relevant, welcome input. I'll just post the consultation in the side. Then you're ahead of me.
Like a race. Okay, well, that sounds excellent. And then Josh, let's have you and Dylan chat after the call as to how you would like us to support you in this. We are happy to take this before the board to sign on officially. Alternatively, we can take sort of a template style of the feedback that you've been giving. We can submit with our own voice if that's helpful as well too, or some sort of coordinated response. But any of those options, happy to kind of discuss and see what may be most appropriate. I think in addition to that, if you can, because we have just about 15 minutes left, and if there's no other questions, can you talk a little bit about what happens next? Because I think there's two reasons this is interesting and important for the audience. One is to understand a little bit of the process of requesting information, how that is taken into and by your regulators and your public sector, and then how that may be used in terms of like driving next steps. What are the typical next steps stemming from a request for information like this?
Yeah, it's a good question and slightly unknown at the moment, but I went to I think there's appetite to move very quickly in the UK in terms of actually getting a regulatory rule books in place. So I went to something last week where there was a speech, and they mentioned that, and this is Treasury representative sort of mentioned that they're keen to get it in place by early 2024, which is moving very quickly from a place where we're still in consultation phase. It's obviously closing soon, but there will then be the sort of feedback stage where they'll go through it. They'll then look to publish a response, and then there'll be further consultations at the specific sort of crypto asset activity. So there'll be dialogue on the fiat-backed stablecoins as the first phase, and then potentially looking at each activity by phase in effect. And so getting clarity of when each phase will become sort of subject to regulation is key. But that's the ambition anyway, that the regulations will start coming in place by early next year. The Financial and Services Markets Bill, which gives the sort of legislative framework for all these activities becoming regulated, still going through the House at the moment. So it requires got a slightly weird system where it goes through House of Commons here, then House of Lords, and then sort of goes back through. So there's been a chance to influence that as it's been debated, and then it will go to Royal Assent, where it's effectively signed by the monarch, and that will. Well, that was originally expected to have come in Easter, but it's looking to be pushed back to summer. But that gives the framework to basically begin regulations, and then the secondary ones coming in around sort of financial promotions as well, which is expected around the same time as that being published. So that's the general approach, but further dialogue expected. The FCA will be having rulemaking sort of remit around a lot of this space. So engagement with the regulator will be pretty key. And there's a dynamic between the Treasury or the government as it exists at the moment, which potentially be a different government in next year, or the FCA as well, who the current chair has been quite critical about crypto assets in general, and they really look at it from a consumer protection angle, and they have sort of a wider remit through the financial services market bill to promote medium and long-term growth. So how that dynamic sort of interplays will be interesting, as well as sort of consumer harm, particular focus there. And then the Bank of England will sort of take responsibility for systemic coins, and nothing yet is deemed systemic, but they've been they said actually the same thing that was at last week, that currently no sort of stablecoin issuers would pass their fit and sort of proper test, and so they'd expect a lot more oversight in terms of stablecoins and looking to promote other areas like CBDCs and tokenized bank deposits, etc. But I'll stop there because that was quite a long answer.
I just wanted to jump in. I know Josh Peshko, you've unmuted yourself a couple of times. I'm sorry to call you out, but just wanted to make sure we got your question if you had one.
Yeah, it's not. I was reading through the thing you sent now. I was just more curious around the post-trade activities and if there's specific things that they're thinking about there, or what what other information they need in that section.
Which section? Sorry, I missed the first part.
Around the post-trade activities, you said there's a few areas, like DeFi was the one, and then clearing.
Yeah, so just I mean, the list of questions there on the DeFi, I think particularly like sort of how you measure centralization or decentralization would welcome views on that. And then just mention sort of if there's other activities that are relevant to particular companies in the call and they have particular views, always welcome to hear that to see if it sort of aligns with our emerging view.
Yeah, I was asking about the clearing and the settlement piece specifically.
Oh, okay. So I think at the moment we have quite a comprehensive sort of response on that. I don't know whether there's a specific,
cool.
But no, I mean,
I'd be curious to see that. That's for our business. We're kind of in the middle of a lot of that stuff. So
okay. Well, yeah, happy to exchange further details after this call if that's helpful. Because welcome views.
One question I had, here in the United States, there's always the risk that things will happen after the fact. So if you've done something that's been deemed from a regulatory standpoint illegal, you can have sort of a backwards looking framework. With the UK approach, as a company, if you understand there's a phase 1, a phase 2 that are coming down the pipeline, are you kind of assured that, given that there's uncertainty, so will you be, if you did something that was against the framework in 2022, for example, will the government go after you, for lack of a better term? Kind of what's the UK approach when there is uncertainty?
Yeah, what I'd say is the FCA, who become sort of the responsible enforcer, are quite, I would say quite open. So you can always, there's a lot of sandbox initiatives here, and when you apply, you get typically assigned a case manager, etc., that you can sort of maintain communication with. And typically, it depends on the size of the issue and everything like that, but typically you'll be sort of warned if there's noticed sort of market activity that seems to be against the regulatory regime before any sort of further action in terms of fines and stuff is taken. A recent example recently is there was a lot of sort of illegal, crypto ATMs are illegal here in the UK, and sort of the FCA did an enforcement in terms of going around and closing those down, but they issued warnings and everything before actually enforcing that. So typically it's a warning first and then enforcement, but that is the role of the FCA and discretion of them, and they will take a lot into account, including size of risk and history of risk and everything like that.
That's great. Yeah, I definitely wish we had more sandboxes here in the United States. I think that's a really great tool.
Yeah, I know they were there's something called Global Financial Innovation Network, which is sort of the global alliance of regulators looking to work together on sandboxes and everything. But I don't know if the US is involved in that. Maybe not, by the sound of it. Okay, great. But happy to finish it there if that's everything. And I posted my email on sort of the side chat if anyone wants to sort of chat afterwards. As mentioned, sort of the deadline for this is fast approaching, and then happy to pick up with Gabby and Dylan afterwards about potential collaboration and approach to this.
Yeah, absolutely. That sounds great, Joshua. And thank you so much for taking time to sit down and educate all of us on this important work. I know we're really thrilled just to have a voice and be able to contribute, and absolutely I'll touch base with you. I'll just check really quickly with Gabby if she has any closing thoughts before we wrap it up.
No, thank you very much for taking the time to speak with us. It's a pleasure to have been able to provide this. As mentioned, for those issue areas or comment spaces where we believe there's a significant public interest, we typically will offer these webinars as free and open to the public. We appreciate all of your attendance and attention. And if you're interested in learning more about the Global DCA or learning more about membership, I'm happy to provide you a bit of information through our member portal. So I'll just place in the chat box a little bit about how you can learn more about who we are and what we do. We represent over 90 member firms. Those are small, medium, and some of the largest names in the digital asset space. Through our efforts, we work to advance standards and guidance, education and certification, and globally sensitive advocacy. We have an open and welcoming enrollment process, and we look forward to learning more about you and your firm in due course. So thank you very much. Have a great rest of your day. And thank you again, Josh and DCGG.